We're coming off of a rough year in 2022 going into 2023 with the stock market. Let's see if we can take a little bit of lemons and make lemonade out of this. Hey, it's Eric with Jazz Wealth Managers, where we don't just invest your dough, we like to educate you on your dough. Let's talk a bit about the good and bad of investing in 2023. Now, the fact is, as I mentioned, 2022 was a rough year. 2023, as of now, we're going to probably see a bit of a seesaw. We'll see where the Fed goes with everything. There's a lot to be ironed out, but how can you capitalize on a bad market? Well, the first one I want to talk about is if we're stepping into that recession, we have to be patient when looking to make a purchase. Now, I want to talk a bit on this for just a second, then I've got a few more that I really want you to bear with me on because they're going to be a bit better than this one. But the first one that I want to talk about here is, unfortunately, bad things are going to happen when recessions do happen. People lose their job, a lot changes, but supply and demand also might change at that point. Right this second, we're looking at the housing market having super high prices still. We're seeing used vehicles, even new vehicles, still flying off the lot. This is where I'm telling you to be a bit patient, because as things happen, if you've got the cash is king when we start stepping into a recession. So it's a way to capitalize for yourself to make sure you're getting a better deal and not going and overpaying for something right now while the demand is high. Now, the next one let's talk about is the stock market's down. Invest early in the year and buy low. And yes, this is one strategy. We always talk about dollar cost averaging in, dripping that money in over a period of time. But the fact is the market's low right this second, especially if you're a younger investor just getting in 2023. This is a great buying opportunity. So capitalize on that. Don't just let your money sit on the side and worry and wait until the market actually recovers before you buy. I've had people who've done that. A couple of you are watching probably right now and saying, man, that was me. So don't be that person. And the last one, this is the best one because, the Fed rates are really high, and a high yield savings isn't going to make you rich. I've never said that. I never will say that, but it is a great way for you to be able to capitalize on the money that you have sitting. So if you're frustrated, the Fed rates are high, mortgages are high, all of these things. If you're sitting on some cash, a lot of people have the emergency reserve. You've been smart about setting aside cash for those emergencies. A lot of banks are out there right now are offering 3% and even higher than that for a high yield savings account that is still FDIC insured. So check that out. Be sure to get a little extra dough for the money that's just sitting there in your bank. These are just a few. There's a lot of other ways that you can capitalize in 2023. But if you have any questions here at Jazz Wealth, you can reach out. We'd be happy to help you.
Thanks for watching. If you want to watch more FinTips videos, click here. Be sure to like and subscribe also.